But in the meantime, let's go for a first take to Mayuresh Joshi. And Mayuresh Joshi doesn't look like a bad set of numbers, definitely. Not as impressive as Infi, maybe, but it is a beat to inline performance.
Morning, Aisha. I think clearly hearing the numbers that you were just enumerating, yes, I think the top line probably looks more or less in line with estimates. The EBIT margin a little bit disappointing, if I would call it, expecting around 20.2, 20.3. So if it's around 20, I think a tad bit disappointing on that front. But clearly, I think the bottom line is something that has beaten estimates. So clearly, we would like to see whether there were any exceptional items on that case, on that note. So clearly, I think it has been a good performance, and though expectations were that it would be a soft quarter because the impact from cross currencies, and to add to that, the Chennai flood impact would have taken a toll on the EBIT margins. But clearly, I think what happens with TCV deals, the growth, as Nikunj was saying, in three segments rather, BFSI, IMS and engineering, I think these are the three segments that I would like to watch out for in terms of the constant currency growth and the management commentary in terms of the outlook that they're probably envisaging for the next few quarters.
Mayuresh, how does the pecking order change now? I mean, all four numbers are out.
No, clearly, Nikunj, I think we've always maintained our stance that top-tier IT companies are looking lucrative, and specifically after the correction that we probably witnessed, we still believe and are optimistic on the top-tier names. Within this pack itself, I think Infosys has clearly outperformed, both in terms of their commentary as well as expectations from their key verticals. TCS, as I pointed out time and again, I think there are execution issues, but again, I think considering the base that TCS is probably working with, one really needs to give it a few quarters probably to start delivering on those verticals itself. At CLTech, again, I think the dependence that the company had to transformational deals, specifically on the IMS side, I think you're probably seeing some amount of shift happening with engineering services also starting to contribute. They're actually contributing around 19.2% of their overall top line. And again, I think shifting work offshore and efficiency gains is something that has aided the company. Again, valuations remaining extremely lucrative for HCL Tech. So clearly, I think we remain optimistic for Infosys, HCL Tech, TCS. That's probably how we're normally looking at. So I think Wipro also remains an accumulate from our end with the kind of attractive valuations that the company derives.
Okay, guys, I have some more numbers. Now, infrastructure has grown at 3.4%, which is a good performance compared to the 0.9 that they'd clocked in the previous quarter. So infrastructure management services has grown well. So that is the one key reply to Nikunj's question. Engineering and R&D services has actually had a negative quarter-on-quarter growth, so which is a bit disappointing, if you will. But I think infrastructure has not done too badly. But I just think broadly and a 2.4% revenue growth versus an estimate of 1.8%. So the top line growth by itself has been very, very impressive. But you guys have actually analyzed it quite well. The only disappointment, if you will, is the EBIT margin. Infrastructure has come in line. Revenue growth much better than estimates, and PAT growth is much better than what we were working with. So on all those counts, it's okay. Maybe the EBIT margin is something that the street would be slightly bothered with, but otherwise it seems to be a good set of numbers.
Yeah, it does. Nikunj, you're trying to dig out the vertical performance, right? Any success there?
No, America's... See, there is all-round geographical growth, which is what you want to see. Retail has done slightly better for them. Infrastructure is going. So the growth is all-round. I mean, you can't find too much of fault with HCL Tech numbers, that's for sure. HCL Tech is not a very expensive stock. In fact, large cap IT is not very expensive, so that becomes a saving grace. The pecking order, to my mind, I think it still has to be Infosys right at the top, followed by HCL Tech, then TCS, and then Wipro. And I think you will see that kind of a performance adjustment. Now, the challenge for HCL Tech was that the Q1, Q2 was not that great. Q3 numbers, which they've just reported for the quarter gone by, definitely are indicating that the seasonality or the weakness what they had reported in the previous quarters, that seems to be getting arrested. And Neeraj, I think that is another important takeaway. If I look at the bright side of the equation, it is that after two bumpy quarters, now growth seems to be coming back.
Well, I certainly hope that sounds in the commentary as well, Nikunj. You actually summed it up correctly. They haven't had the best of last two quarters. Even for infrastructure management, I'm just looking at what the growth pattern has been. 3.4% this time around, 0.9 the previous quarter, 5.2 the quarter before that, 3.1 the quarter before that. So it's become very, very lumpy, the lion's share of their business. But hopefully things are stable because it's looking in the top line and the bottom line as well. Now, if they guide for a good second half, remember, for them, this was the second quarter.